Stainless. This time the company did come out with a decent set. Let's understand more from the management itself. And Mr. Anurag Mantri, ED and Group CFO of Jindal Stainless, is joining us on the show. Hi, very good morning, Anurag. This is Shrishti, and thank you so much for joining us today on ET Now. First of all, let's have a look at your Q4 earnings, because we believe that on a YY basis for FY24, the numbers, the volume growth has been great. But specifically, the Q4, the margins have contracted a little bit. We believe that it was due to negative inventory valuation and the increase in the freight cost. But now that the nickel prices have started falling and that the Red Sea issue is also behind us, could we expect your margins to expand to 14 to 15% mark in the first half of FY25?
Thank you, Srishti. As you rightly narrated, is that we saw an unprecedented fall in the nickel consistently for 8 months from May onwards till almost mid of Feb, which has impacted the result, but it started rebounding now. And the Red Sea also put up an additional freight burden on us, which actually impacted the quarter 4. But overall, if you still see, we delivered the 20% volume growth, almost 23% volume growth in FY24. And the EBITDA overall, we still have 18,500 per ton. So well within our range, what we have been communicating. We have already started seeing with nickel rebounding. We started seeing some of the uptick. However, the Europe market remains still the challenging one because they are subdued demand. But overall, what we see is the domestic market giving us good traction. Therefore, what we are maintaining is that for FY25, we are again confident of further delivering further 20% volume growth in FY25 and EBITDA margin of 18 to 20,000 range for the full year guidance. So we have already started seeing recovery, what the low we saw in quarter 4, and we are seeing a good uptraction in the market, and gradually the recovery will come in the second half, first half, and maybe quarter 2 onwards more. But overall, we are still saying that our guidance of 18 to 20,000, we will be able to should be able to achieve those guidance in for the FY25.
Right. A very good morning to you, Mr. Mantri. This is Cheryl also joining in the conversation, and you've definitely given good numbers saying that your EBITDA guidance you're maintaining at 18,000 to 20,000 per ton for FY25, 20% volume growth for FY25, and you've definitely said domestic environment is also looking pretty good. So if you could add some more on that particular front, if you could tell us what sort of sectors are aiding to the domestic demand. Is it your railways, auto, infra, pipes and tubes?
Yeah, thanks, Cheryl. So if you see what we saw a good traction coming from the government Gati Shakti program. So we are seeing across the railway picking up a good traction. We are seeing auto giving us a good traction, lift and elevator construction side. So a lot of infra related development which are happening. We are seeing a good traction coming from on our volume side on that. Besides that, of the infra side, the process engineering is also adding good to our volume side. So we are confident that the overall domestic market is showing a good volume growth and will be able to meet up those. So auto, rail, if I summarize, auto, railway, lift, elevator, process industries, those are segments which will actually contribute a good volume growth for us.
And also, you recently announced the strategic investments to the tune of 5,400 crores. Now, out of which 700 crores we believe is for acquiring 49% stake in JV for 1.2 MTPA stainless steel melt shop in Indonesia. Now, help us understand that how will it help you and what are your expansion plans in Indonesia?
See, this melt shop expansion is more to cater to our growth forecast for our FY26 onwards. So as you know, our current capacities we will be exhausting with because we have been delivering 20% volume growth last year. This year again we are targeting. So with this, our capacities will be getting exhausted in FY26 onwards. So just immediately to address to those needs, we have actually got into this joint venture, which will take our capacities from 3 million ton to 4.2 million ton. And that with that expansion, it gives us the two advantages. It's a plug and play model in Indonesia. So it actually helps us into making up those capacities up and running very fast as compared to what if we got into a new greenfield expansion at a much and second thing is that it also gives us the raw material security, because Indonesia is where the largest nickel resources are there. So with this, we will actually get a more closer to the nickel resources. So it helps us into the enhancing our raw material securities and risk mitigation for our raw material side. So both ways it should be there, and we believe that it will be up and running within 24 months. So it will be able to address our growth targets for FY 26-27 onwards. So we can then continue to deliver another 10% growth on a subsequent years also with this.
Yeah, wanted to follow up on that, Mr. Mantri. So, how will this 5,400 crore rupees investment be funded? And also, if I could add to that, the strategic investment of 3,350 crore rupees in downstream capacity in Odisha over the medium to long haul. So, say about 3 to 5 years down the line, what sort of a target would you be aiming to achieve when it comes to EBITDA margin?
See, it's difficult. I would not give the very long-term EBITDA target at this stage. But let me tell you, I think we are what we are getting is that in the right direction, which will surely help us in improving our volume growth as well as on the margin side. So with this capacity, today if you see today we are at 3 million ton player, and but our downstream facilities and cold roll finishing line is just less than 50%. With these capacity expansion of 5,400 crore, what we have announced, we will go up to 4.2, and our downstream finishing capacity, which actually helps us strengthening our margins, will reach to a close to 70%, which is in line with the global standard. So we are actually doing a three-prong expansion where we are actually increasing our med, but also we are increasing the downstream capacities almost coming at the same time. So it will give us a good balancing, which will surely help us to improve our earnings and the margins in a long run.
And lastly, Mr. Mantri, if you can also guide us on your export outlook as well, like how is the demand environment flaring? And I wanted to add one more question, that the imports from the China continue to surge, which has impacted the domestic stainless steel industry. So are you also hopeful of the countervailing duty, that is CVD, being imposed soon?
Okay, so Srishti, answer your first question in terms of how the export market is looking. So as I mentioned, we export to a very key premium markets, largely the Europe, US, and the other geographies which we have now developed is South Korea and other things. Our Europe market is still, we are seeing a subdued demand, and especially with the Red Sea crisis is though tapering over, but the freight cost is still high. So we see a limited growth coming in the Europe market, at least for this year. With this, we are targeting that our export mix should be 10 to 15% in line with what we delivered last year. So that will continue. We may not be able to see much improvement in the export side. But having said that, we will because we are very flexible business model between our domestic market and the export market. So we will be able to deliver the 20% volume growth. Still, the export remains challenging in the European market and some of the key markets. Now, coming to import side, that's a major challenge, obviously being put up by Chinese imports. So if you see last Q4, the Chinese imports have still increased quarter on quarter basis almost 20%, which is really a worrisome sign for the industry and especially for the MSME manufacturer. Because if you see, most of the smaller players are right now not been able to utilize their capacities or closed, and which is not a good sign for any manufacturing dependent economy, because unless the entire ecosystem of the larger player as well as the smaller player gets developed. So in our thing, what we are expecting the government that to really look at those very carefully, and we need to completely develop as a full ecosystem where the MSME manufacturer also thrives in the economy, and especially in the stainless steel sector, which is a very forward looking metal. So I think this is where, but right now I think otherwise Chinese are really invading the market, and you can see that 20% quarter on quarter import increase is actually not good for the country from China.
All right, then we leave it there. Mr. Mantri, thank you so much for joining us on ET Now, and all the best for the future. Definitely a confident management, hoping for a confident FY25. That was the management of Jindal Stainless joining us on the show, talking about the earnings and the way forward going in, giving us some key numbers that they are confident of about 20% volume growth in FY25. They're maintaining their EBITDA guidance of 18,000 to 20,000 tons for FY25, as well as they are seeing a strong volume growth in the domestic market. But from one earnings to another.
If you like this video, then like, share and subscribe to ET Now.